Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Ports. Welcome to episode 33. This is the Euro Turkish Lira. The last time we talked about the Turkish Lira and the Euro, we were trying to buy the tourist arrivals in Turkey. This trade on Euro TRY only happens once in a year towards the closure of the year in the southern hemisphere. And I talked about the Europeans flocking to Turkey because Turkey is the doorway to between Europe and the Middle East, and the Middle East is uh, normally has temperate temperatures, or what we call warmer temperatures, and it is Turkey, the Middle East, and yeah, and Turkey is actually a NATO member, so they want to be accepted into the European Union. I don't believe they can do that. They're just a NATO member, a member in arms, meaning that if a country of NATO gets involved in a war, Turkey will also be helping with weapons. So we talked about a trade in a trade. Here's the trade that we're talking about here. We talked about the trade starting on the 28th of August. I hope you can see the 28th down here. The 28th of August. Let's zoom this baby. Yep. The trade starting on the 28th of August. Hope you can see it down here. And this is not the actual trade. The trade will be uh, getting down to the 50% feed and then coming back on the 30th of September. And the take profit level will be on the 15th of November for me, and for others, it's on the 22nd of November. I normally don't uh, take pullbacks when I trade. This would be the largest pullback I can take. After that, I'll make sure that I take profit because I have a low where I can draw these lines that we have here. That was 2024. Let me show you. It was 2024. Hope you can check the time down here. This was 2024 in August the 28th. So this trade it's showing itself up so far. Uh, so far I am satisfied with it, and so this is the 28th today. I'm not sure if you can see the date. Let's show point on this candle. I hope you can see the date down here. Let's point on this candle. It's the 28th of August 2025, and this is the date. So the trade starts on the 28th. At the moment, the what we see here is not. It is actually where this line is at. We are still waiting to drop to the 50% feed, and I believe I'll be taking profit on that first trade. And when it comes back to the 23.6, oh, this is the 50% feed down here, and the 23.6 is here. I normally take my trades above it. So it was already marked with the trading system that I use. Let's mark it. Let's mark it like that. It's tiny for me to be looking at it like that, but I would really appreciate it if the trade could actually rally higher than what we see here, because I told you about the euro on the previous video that the euro is preparing for sales, and I'm buying it at the moment. Why? Because normally when macroeconomics tells you to sell a currency, it starts going bullish because the market makers don't have enough money to uh, to push the market all the way down here, that is too expensive for the market makers, and they don't trade with their money. They trade with retail traders' money. So that's the reason why I'm expecting the market to push about here, at least something like this, but it has to go all the way up there. I will be updating you on this economic projection that I have. You know, I just want this candle to really push up there, and when it gets to the peak, I will then be able to mark my feet up there, and I just want something like this, a spike that tells you that the market makers made enough money. Their intentions are just to, they know that the fundamental traders are trying to sell the currency since the fundamentals are telling them to sell the euro. So they buy the euro immediately so that they can stop them out first and make that 3 million, that 3 billion that is needed to push the market lower. I will create a calculated system that I use on the what they call Wyckoff schematics, and the system that I have is just a Wyckoff schematic, but it does not necessarily look the same as Wyckoff schematics. A lot of people are asking me about my strategy, and I don't really have a strategy. I just uh, trade what happens most of the time. I don't have a pattern. I just use Wyckoff schematics. So this is the shoulder that I'm looking forward to breaking up there. Why am I breaking there? The euro is telling me to sell it, so I am buying it at the moment. I just want the market to push up there so that we can get the 28th. Yes, today is the 28th, and the 28th of August, it's down here. And one that, if the, remember, tomorrow is Friday, so we are closing a weekly time frame candle. So that weekly time, normally when a candle closes, it goes to the highest level and then it closes below that level. So I'm just trying to take advantage of tomorrow, where we can get a peak higher and close lower, which is a peak higher here and close lower. For this week, really love to see something like that, so that we can actually drop lower because of the system that the market makers are trying to do. And nobody said the market will turn around here. It might turn around from up here or anywhere else because this thing is an order block here. Let me show you that this is what's happening to this guy. Why am I not finding this guy? Okay, this thing here is an order block, but I don't normally. But for us to believe in what I call volume or Wyckoff schematics, I'll explain what I mean by volume or Wyckoff schematics. Is that for this order block that is forming up here, for it to be valid, we need to create what we call volume. Now, what is volume? Volume can be seen when the market breaks the shoulder, the previous high here breaks above it, and it breaks below the previous low. So now, if we can break the previous high here by going up here and break the previous low here by going down there, that validates the order block that we are looking forward to trading here. The order block that will form here, we don't have it just yet, but it will validate the order block that we're going to be having here. It's not formed, but I know that it will form because the euro is pricing in the cells. And I used to say in the past that when the when the The macroeconomics tells you to sell a currency, the price that the banks are not ready to buy or sell the currency at that market price. Now, what do I mean by a market price? Let me show you. See this line where the market is at? This piece here, this 48.021, that is called a market price. And an arbitrage opportunity is okay, I'll explain the rest of the other things that the terminology that I will explain it in the future. But what I'm drawing here is the difference between this market price and the market price that the central bankers are willing to sell the euro at. They are trying to sell the euro at a much cheaper price, which is up here, so that they can buy the Turkish lira. I hope that we understand each other. At the moment, we're trying to sell the euro and buy the Turkish lira. And the market price at the moment, let's say it's a little bit expensive for the central bankers. So they need to push the market price lower. Remember, I'm pointing lower upwards because we're trying to sell the euro. So the euro at the moment is expensive. We want the euro to become cheaper up here, and so that we can sell the Turkish lira. So that's why I'm expecting something moving up here and creating a valid order block, and giving us that beautiful volume by breaking the previous high and the previous low, uh, uh, and the 50% fee moving at least lower than what we have now. Yeah, if the 50% fee can move down here, I'll be much happier because we're expecting to break the previous low and the previous high up here. And right now, this is an economic projection. I know that I have this thing here, but this is not the highest peak of the market. It's just an economic projection and the expectation of the market to break this level. Remember, we're changing the dates from the 28th of August perhaps to the 29th on Friday. So that's what we're trying to pick at here. And so that we can drop down here. But the actual trade takes over on the 30th of September, which it will be up here. At the moment, we are forming the 50% feed and we're coming back up here to sell the market. So the take profit level is down here, just a little bit below the 50% feed. So we what we can do is that we can sell the Turkish lira and we can buy the Turkish lira, come down here, take profit at the 50, or obviously it will manipulate down here. And if it manipulates down here, we know that the actual take profit level will not be here because for us to take profit, the market has to drop lower. Then that means the take profit level will be lower than what we have here. I'm trying to point at this thing, but I'm not succeeding. So the take profit level will actually be below this because we need to take profit here. It will manipulate it down here. Wherever it turns around will tell us where the next take profit level will be. So we just sell, take profit level here, and sell again and take profit level below the previous low. And after that, the trade is over. We're not trying to trade this next pullback. I don't like uh, trading pullbacks. Remember, this trade is not a long trade that takes that is a steep trade. It's a sideways move trade. What we're doing is that we are collecting the swap over time. The swap is at 1,184.08 points at the moment. So goodbye guys. I'll see you on the next video.